Welcome to The Explainer. So, today we're going to talk about the day a crypto company basically kicked down the door to Wall Street. Yep, I'm talking about the landmark Coinbase IPO. Okay, let's just get right into it because April 14th, 2021, this was way more than just another IPO. It was a huge moment for the future of money. This was the day crypto stopped being just a thing for tech nerds and became a real major league player on the biggest financial stage in the world. So what we're looking at here is a collision of two completely different worlds, right? You've got the old guard, traditional finance, all buttoned up with its stocks and bonds. And then you have the wild west of crypto. It was a massive culture clash. You see, for the first time ever, a major crypto exchange got listed on a traditional stock market, the NASDAQ, no less. Just that one act gave crypto this whole new level of legitimacy. Suddenly, it was way more accessible to, regular people. It was like building a bridge between two totally different financial universes. So, you've got to ask yourself, how on earth did this company get big enough to challenge the entire financial establishment? Well, its story is just a classic tale of explosive Silicon Valley-style growth. Okay, now look at this timeline. The speed here is just wow. Coinbase goes from a simple startup idea to a platform with 56 million users in under a decade. That's not just growth, that's a financial big bang. And the whole thing was the brainchild of these two guys, Brian Armstrong and Fred Ehrsam. Just a couple of young visionaries who imagined this more open, more accessible financial system for everyone. And you know what? They weren't alone. They had some real heavy hitters in venture capital, like Andreessen Horowitz, who saw the potential and bet big on them right from the start. And man, did that vision pay off. Spectacularly. The success of the IPO instantly made its founders some of the richest people on the planet. CEO Brian Armstrong's net worth, it just soared to an estimated $6.5 billion. And his co-founder, Fred Ehrsam, he wasn't exactly hurting either. He was right behind him with a net worth of almost $4 billion. But look, these numbers, they're not just about two guys getting rich. They're a signal. They show you just how much value the market believed this whole new financial system could create. So, all that massive wealth came directly from one of the most hyped-up market debuts we've seen in years. And the numbers from that first day, they're just insane. Let's break them down. All right, so the day before trading starts, NASDAQ sets what they call a reference price at $250 a share. Now, this isn't what you could buy it for. It's more like NASDAQ's best guess of where the stock might start trading. And even at that guess, the company was valued at a massive $65 billion. Think about that. That's bigger than financial institutions that have been around for a century. But then, the market opens. And the demand was just electric. The stock, ticker symbol COIN by the way, it didn't open anywhere near 250. Nope. It opened at $381 a share. That's a crazy 52% jump from the get-go. The floodgates were officially open. And the frenzy just kept going all day long. The price absolutely rocketed, hitting a peak of over $429 a share. You had investors just scrambling to get a piece of the action. This was classic Wall Street FOMO, fear of missing out, playing out in real time for everyone to see. So, by the time that closing bell finally rang, Coinbase finished its very first day valued at a jaw-dropping $85.8 billion. You just can't argue with that. It was a huge statement about the power, the legitimacy, and the raw financial force of the entire crypto economy. Okay, so this all leads to a really important question, right? How does a company like this actually make its money? And maybe even more important, is that business model even sustainable in the long run? Well, the answer really comes down to one thing: revenue volatility. See, unlike a company that sells, say, coffee and has predictable sales, Coinbase's income is completely tied to the wild ups and downs of the crypto market itself. And if you're an investor, that's a massive risk. It means the company's profits can swing like crazy from one quarter to the next, all based on how the market is feeling. And this chart, it shows you exactly what I'm talking about. Look here. Revenue actually went down in 2018 and 2019. That was during the crypto winter, when prices just crashed and nobody cared. But then, look at 2020. The market roars back to life and boom, revenue more than doubles. It's the definition of a feast or famine business. So let's drill down a little. Where does all this money actually come from? Well, it's super concentrated. A massive 86% of their income comes from just one thing: the fees they charge you and me every time we buy or sell crypto. Now, relying so much on those fees is their greatest strength, but it's also a huge weakness. So, what are people actually trading? You might think it's all Bitcoin. And yeah, Bitcoin is still a huge driver. But what's really interesting is that now most of the trading fees actually come from other digital assets. And that tells you something important. It shows the market is growing up, it's diversifying beyond just Bitcoin into this whole ecosystem of different coins and projects. Okay, so let's zoom back out for a second. What does this whole wild ride for Coinbase mean for the bigger picture, for crypto, and really for the future of finance? To really get a handle on crypto's potential, you got to put it in perspective. You have to compare its size to the traditional markets. And as huge as crypto seems sometimes, its total value is still just a tiny fraction of something like the gold market or the global stock market. And that gap, that right there, represents a massive opportunity for growth and a lot of money to be made. So the experts pretty much agree that future growth for a company like Coinbase really boils down to these four key things. But the one everybody has their eye on, it's number four, the big one. We're talking about large-scale institutional players jumping in, pension funds, hedge funds, giant corporations. That's seen as the next big catalyst, the thing that could launch crypto into a whole new stratosphere. And that's really what it all comes down to. That's the big question we're left with. You've got major companies putting Bitcoin on their balance sheets. You've got Wall Street now fully plugged in with stocks like Coinbase. So, have we finally reached the tipping point for digital currency? Is its growth now truly unstoppable? Well, that's the billion or maybe even trillion-dollar question for the future of finance, isn't it?